Hi everyone, it's your boy Buck says, back with another video. I know it's been a fair while since my last one, but yeah, life gets in the way of inevitably of some good things, but we do have something good for everyone to see out the year, and it's about something that actually affected 2021 in a big way. That was the rise of crypto, NFTs, and towards the back half of the year, the metaverse. We have a special guest on the channel, Reventure Consulting. Reventure Consulting, aka Nick. Nick is a good friend of mine. Actually, he's coming off the back of a phenomenal 2021 where he basically went from no subscribers to about 135. So lots to emulate and a big target to set by him. But he's been very generous with his time. You should check out his channel. I'll put a link in the description for everyone. Super magnanimous guy, really intelligent with his views. His channel's doing really well for a reason. So what he has to say is probably of paramount importance to anyone looking to invest or the counterpoint is maybe looking to stay away from something that might be negative. That's being probably amped up to being something that you need to be involved in. So yeah, very thank you again, Nick, for your time. Really appreciate it. This is going to serve as the intro, but I don't know if we'll have an outro. But if I don't, I'd like to say thank you for everyone's support across the 7 videos or so that I did this year. More to come hopefully in 2021 as time presents itself a bit more regularly. And yeah, please like, comment, subscribe. Give me any sort of feedback on this. This is a lot longer than usual. My videos tend to be quite long, but you know, this is probably in more of a podcast setting. But me and Nick have great camaraderie, and these are conversations we have on a regular basis. So to everyone and their families, Merry Christmas for just gone by and a Happy New Year, and roll on 2022. Hopefully, it's a success for everyone. So yeah, like, comment, subscribe, and enjoy the video.
So yeah, let's talk about NFTs and in the metaverse and virtual real estate, because one reason I covered this was because I went on Google Trends to try to figure out what's going on.
Yeah,
and it said virtual real estate in the metaverse, which is like shooting up, and I didn't even know what it was. And I looked into it, and it's all these people buying virtual plots of land for millions of dollars in some cases. And I'm like, what's going on there? But I guess it's used through NFT. It's like, it's still an NFT or uses that technology. I don't quite understand it.
I think so. My first exposure to NFTs was through Logan Paul. He was one of the first to jump on the bandwagon. It was when the Pokemon hype was quite high, and he was doing these box openings, these booster breaks, right? So opening these really rare vintage collections. And what he'd say was, to be part of the opening, we're going to run these limited edition non-fungible tokens, right? Which show you a part of it, right? So what it is, I mean, it's quite a weird concept to get your head around. It ties into crypto massively. But I think you have to go a step back to kind of understand the NFT space. Where you have to understand it is the inception of kind of this all the way back to the semiconductor, the transistors that operate our software, all the way down to kind of where we've come now, i.e., when you think about it, right, NFTs represent like an insidious creep of where technology has been headed. Like if you see what Elon Musk has said about stuff like Neuralink, which is being able to communicate through not even speaking, but communicating through brainwaves. He said that actually what you're going to do is slowly bring these things into fashion, i.e., with your phone, right? You had a brick phone originally, you had a Nokia phone, you were able to text with keypads, you're able to have real-time communication. Then came social media, real-time information. Then came smartphones with biometrics, i.e., it's pretty crazy to think about, right? When you swipe your phone, it moves, or you touch something.
Yeah, so I get that. How is the NFT a part of that?
So I think what's happening is, so crypto was the next big thing, right? Crypto is like a big thing against fiat money, and it's kind of like this. Well, originally used for stuff like Silk Road and all that kind of stuff, right? There's no traceability, right? But it's verified ownership, right? So what they say about gold, right? Gold-backed money is that you can't actually see the gold that is in anyone's reserve, right? You're basically trading off goodwill, or you're trading off someone's word. Whereas NFTs it's backed up on the blockchain, but it has verifiable ownership, right? So even though it's easily replicated, i.e., say the Mona Lisa was an NFT,
you can make 10 of them.
You can't replicate it, right? So if I bought the original Mona Lisa NFT, it would be backed up on the blockchain with my ID. So
then, I guess the original Mona Lisa NFT. So someone, I'm sure that's been created at this point, but so someone would just, the first one to create it would have ownership of it, kind of.
Yes.
And I theoretically could create another one, like a replica, or I could change the shading on it, or like you could create a replica of a real painting.
Well, but this is the thing, isn't it? You could create a replica of anything. You could get a canvas and you could paint the Mona Lisa. It'd be a replica, probably not a very good one. But I think if we go back to the basics, like of what I saw Logan Paul do, is he created NFTs of an experience. You own this clip. You're part of this journey. Now, let's just take the Charizard first edition. We've spoken about it a lot, right? Sold for like 430 grand, now down to 250, right? That card is limited to 120 copies or 121 now, right?
Yeah.
There are people that have made proxies of that card that are very close to the original.
Physical replicas.
No one is paying $450,000 for a proxy, right?
Sure.
There is an element of verified ownership. I actually, the Charizards that sell for 450,000 actually come from reputable sellers. They have like a lineage. They have a sense of ownership. That's what NFTs do. They just do it electronically.
And you can see in the blockchain, like it's like transaction. This guy owned it. This guy or girl owned it, and you could see it.
Yeah, and so it's the first to market approach. It's a part of history. So CryptoPunks are some of the earliest NFTs. People like FaZe Banks are involved in it, and like Gary V pushed CryptoPunks quite hard, I think. But in effect, right, it's like having a trading card. It's like having the like Mickey Mantle baseball card, right? Having an original, not a copy. I'm sure you could go and print it and stick it on a piece of paper, right? So you can create a copy of anything, right? But you wouldn't have been the first to own it. You don't have the original copy. In effect, it's like having verifiable ownership of an original copy. Now, where this leads is, and why I talk about the insidious creep, is you look at games like GTA Online, right? GTA Online is the metaverse. It's just on your TV, right? It's crazy. I mean, I don't know if you played it. You can literally do anything in it. You can become CEO of a company. It's unbelievable, right? It's unreal. They're doing the same with Red Dead, right? So it comes back to that thing of getting people used to things slowly, like touchscreen, VR, bringing it all in. I think what NFTs are going to be able to do, so they're going to go hand in hand with the metaverse. And actually, I don't know if you heard the story about Mark Zuckerberg, right? But he walked into Oculus, like, I don't know when it was. I'm going to get my dates mixed up, but he walked into Oculus like 5 to 7 years ago, and as soon as he had a 45-minute demo or something along those lines, I think he must have not. Did he buy? I think he might have bought the company straight away.
Yeah.
Because he was so mind boggled by it, and I think his now thing, he's obviously shifted completely to the metaverse, right? Because he wants to be the architect of it. Have you seen Ready Player One?
No.
You need to watch Ready Player One. Basically,
just to bring this back to NFTs though. So like, the NFT is it's digital ownership of something. So again, the analogy is you have the real Mona Lisa, you have the Mona Lisa NFT. They both have the authentic copy. Now, the authentic copy of the real version has value partially related to the fact that it's so old, right? And like, Leonardo da Vinci painted this. The authenticated original copy of the NFT Mona Lisa has value because it's the first NFT authenticated Mona Lisa. It's the only one, I guess. But I'm just trying to think through my head, like, does that carry the same value as the physical one, or no? Or maybe you're going to say in 50 to 100 years, when NFTs are so big, if we go back and say, oh, well, this was the original NFT, people are going to view it in the same way that they view the original Mona Lisa. Is that kind of the idea? So I'm just trying to understand it.
I think the Mona Lisa is a tough example because we can't separate what's come before to what is now. It's difficult because we have to kind of think of the inception of something brand new, almost like you talked about real estate. The Mona Lisa is a specific case. It has lineage and history, which is why it's so coveted, right? But you can't separate that from an NFT currently. I think why CryptoPunks, there's lots of different CryptoPunks, and why the number one CryptoPunk is more valuable than the number 127 CryptoPunk is because people assign a personal value to the ownership and rarity, right? So there's like a phrase in Pokemon collecting: older, rarer, minter, better, right? So I think a lot of it comes down to lineage, history, a sense of ownership and wanting to own that specific thing, right? So, like for example, if I went to the Louvre right now and asked to buy the Mona Lisa, they'd quote me an extortionate amount, right? It's almost priceless because it's a level of tourism, it's a level whatever. In effect, when you own an NFT, which is, I mean, they can be replicated. So, for example, sometimes there's one of 16 NFTs. They do 16 of the same thing. So they can be replicated, but they're issued in the amount that they're replicated. I think it's not, maybe you can start, replicating it, because I think the argument a lot of people suffer from is that, like, I mean, go on.
Yeah, I'm just trying to think of it. So like in the case of you're saying that they create 16 copies of something, and this is like it's like a card release. This is the original release, and I get that. It just seems like it's so easy to create new releases and replicas of things, and of course it's easy to create replicas of cards. My question is like, how do people know? How do people actually know? Is there like a database that tracks every single NFT release? How do you even like follow it? It seems like every single day someone could just create a new version of something, a new replica of something. And it's literally not bound by any physical, at least cards or paintings are bound by some type of physical law, right? Like you need the materials and the people to work on it. NFTs, you can just theoretically create an unlimited amount of replica copies, right?
Yeah.
So is that knowing that still the first version is more valuable, but is that going to be a problem? Like, how do people figure out what's valuable in the NFT space? Is it just a complete shit show where like it's all over? One day something's like this, the next day it's like that, and who knows? Is there some type of order and pecking order to what's valuable? Or the way I'm thinking of it right now is it's like I could just create my own NFT. Not that it would have any value, but I could just create another Mona Lisa NFT, and there's another one out there. And could that be searched in a database? Like, could someone search that? Or how do they find it? And how do they know if it's something that people are interested in?
So I think the key missing piece of information, and by no means am I an expert, but in my limited reading, the blockchain is the key bit, because it verifies ownership, i.e. it verifies the uniqueness of it. Not to go back to an old horse, but just imagine Pokemon cards again. First edition Charizard, right? Worth 450,000, right? Shadowless Charizard, which was the next one that was printed. So if we think about printing, right? Reprinting of something, right? Which is reissuing of the NFT, right? First edition Charizard, 450,000. At the same time, the Shadowless, which was the next printing, was 100,000. And at the same time, the base unlimited, which is the one we grew up with, was 30,000. And then base set 2, which was the fifth printing of the card, was 10,000. And then evolutions, which was the sixth printing of the card, was $3,000. And then the one that's just been released a month ago, is going for like $500. So, you can reissue every time. I think if you think about it in terms of relatability, think about the Reventure Consulting video, right? Let's think about your first ever YouTube video. You could effectively create that as an NFT, right? You could create that and be like, I'm selling this as an NFT. My first YouTube video, you will own my YouTube video. In effect, you could actually issue all your YouTube videos as an NFT where one owner owns them. Now, someone could have screen recorded your video, right? But say I buy your first ever YouTube video because I'm like, oh, this guy's going to reach the top. He's going to be the top real estate YouTuber come 2025. I want to trade off his success. There will be something verifiable that will say, I own it. Now, say, you leverage
the ownership, so the ownership is just in the NFT world. It's not like as if clearly I still have the rights to the income stream from it, right? Or unless I were to include that with the NFT, right? Like, I guess I could create like the ad revenue income stream from that video is still mine, right? Or I could attach that to the NFT potentially.
Well, I don't even think it works like that. I think it's almost one-off. It's very transactional. It's one-off. It's not kind of, and maybe it will become more dynamic in the future as stuff becomes a bit more advanced. But I think you've got NFT for me equals digital collectible. So it's replaced like Yu-Gi-Oh cards, Pokemon cards. It's stuff that's going to appreciate in value, and you're trying to find the investments. I'm guessing in terms of virtual real estate and how it links into the metaverse, what I'm assuming is just like in GTA, how you can own a yacht, how you can own a penthouse, how you can own a house on Rodeo Drive in LA. I'm assuming that people are going to start trading off virtual properties in the metaverse, right? You get in early and you start trading off some of this money now. You start becoming a property mogul and trying to earn, get a foothold in there now with the real estate.
Yeah.
It's first to market, right?
Yeah,
and you have the ownership.
That's interesting. Like the broader thing I'm getting from this is it seems like there's a severe demand from, I'm imagining it's like younger people for the most part, 20 to 30 years old. Maybe it's some older people too, but like, it seems like there's a tremendous demand to own things,
Yeah.
period. And it
Yeah.
seems like maybe young people don't feel like they can own maybe the things that they did in previous generations, like stocks and real estate, like physical real estate stuff. It's too expensive. So people are diverting maybe what they would spend on that to buying these NFTs representing the digital versions of that. Is that kind of a like right way to think about it?
So, like, I think the reason I kind of get an innate understanding sometimes of these things at a really high level, not detailed, is that I'm a collector, right? Pokemon
Yeah.
cards, Yu-Gi-Oh cards. I mean, I've got my Captain America shield over there. I've got my Thor hammer over there. Uh, what people don't understand is actually, and what I'm realizing over time as I get older, is everything has a cost associated with your time, the cost of your energy, and actually the cost of storage and the time taken to organize the stuff, right? Like to
Right.
carry around these stuff, moving from place to place. And we're living in an environment now
Yeah.
where opportunities are abound.
Carrying
Right?
around your comics, literally.
Exactly. I've got 1,000 comics sat in my house, right? And I'm so scared to move them about. I think what it removes is it removes damage. You can keep something in mint condition easier, i.e., it can maintain its value. I'm worried half the time my stuff is going to lose its value just in transit. I'm worried that it's going to lose its value in storage. I'm worried that it's going to lose its value like in totality just by being stolen. Now, it's impossible to steal an NFT from what I understand unless you lose your login details. So that's another key point, right? Well, it's very hard to steal something. It's not like just breaking into someone's house and leaving with the loot, right? So I think that's the allure of it, right? And
Sure.
we're being conditioned like as a generation now. I mean, I don't know if you've got into shorts yet. Like, YouTube does shorts now, Instagram shorts, TikTok shorts. Everything seems to be like we're being conditioned into this low attention
span. Yeah.
Yeah, and so I think that is what the allure of it is. That, well, right now there's a big learning curve to bridge, but the allure of it is it's quick. Once you make that initial time investment to learn it, you can be buying NFTs and you can have a portfolio that's very quick to review without very little manpower, right?
Yeah. Now, of course, there's something less tactile about buying an NFT for a Pokemon card, right? Versus having the Pokemon card, right?
Yes.
Maybe it's me being old school. I would assume there is something innately better about having the physical thing. You're right, there's cost to it, but then having it physically, I feel like distills like a greater sense of ownership. And maybe digitally, maybe that's just the old world and the new world is going to be digital, or obviously it can be some combination thereof going forward. It seems to me like NFTs are going to be extremely volatile always, right? Like, because if you can just create these things so quickly and the storage component isn't there and the physical component isn't there, the liquidity of the transactions and people buying and selling them can happen much faster. Right. And then if you don't have the personal ownership of it, like physically, you're not going to have the same emotional attachment to it. I would think. Right.
Yes.
And so maybe the NFTs are going to be more quickly traded, which is kind of interesting. Here's where I'm struggling though. So, okay, let me ask you a question. What's the biggest NFT market right now? Like, for what collectible is the?
It's difficult to say. I saw NFTs for tweets. I think CryptoPunks is the one I've seen. A lot of art. I mean, it's art. Art is
art. All right. So there's already a physical art market, right?
Yeah.
And originals are millions of dollars of stuff that's like really famous and really good. You can buy digital prints for much cheaper. Did the demand for art go up? It seems like it did, right? Like if people are still buying physical art and buying digital art, the demand for art went up. So it's like art is the total space.
Yeah.
And it's physical art and digital art, right?
So the problem with that argument is that I'm not sure if you can categorize art as one thing, right? Because the problem is art is all encapsulating, i.e., you can label a tweet as art, right? Like it's a form of expression.
I'm just saying, like, this argument's maybe just for
illustrations,
traditional art, like a picture or a painting or something. Like, if there's, again, to go back to Mona Lisa, there's the original Mona Lisa, there's the NFT. if all of a sudden this NFT art market didn't exist 3 years ago or 4 years ago, and now it does, right? Like that to me says people's demand for art has increased, and maybe the NFTs are just like, it opened up a new avenue that was much easier, just made it more easy, I guess. Like if you wanted to participate in the traditional art market, I guess you'd have to be connected. You'd have to know these weird people for Sotheby's. You'd have to go to the auctions. It's like, who wants to do that? The NFT makes it easier. I'm just gonna like talk through it and try to understand it. Because obviously I think it seems fascinating and like it's here to stay for sure.
Yeah.
I'm just having trouble wrapping my head around the intrinsic value, right? Which
I think it's really difficult because, like, on one hand, I just think part of it is it's backing a new trend. The problem is with the whole, going back a step to your previous point, is anything with value, it's been given a value by someone, or it's a very personal thing, right? So when you talk about value, i.e. something, so tangibility, right? That's the key point you made. Having the first printing of Harry Potter in my hand, or having a minted NFT of a Harry Potter book, right? The first minted NFT of Harry Potter. Now, it's all about the value I assign to that thing.
Can you read the NFT digitally?
Sorry?
Like, is there actually a book associated with it digitally?
I'm sure there probably is. I'm sure you can view video clips in NFTs, you can view tweets in NFTs. But I think you can. But say J.K. Rowling released all 7 Harry Potter books, right? Let me give you if J.K. Rowling tomorrow decided, I'm going to release the 7 Harry Potter books as 7 separate NFTs, I guarantee you those would go for stupid amounts of money, because there's some crazy Harry Potter fans that would be like, we love J.K. Rowling, we love Harry Potter, we want to be part of that history, we want to own the Harry Potter NFTs. The singularity, there's sometimes uniqueness, but the singularity of that and the history. But the point I'm trying to make is, even with gold and everything, right? Gold is a metal, right? We've assigned value to that. It backed money.
Yeah.
It doesn't now. I mean, people print money, right? But it still is a gesture of security and a gesture of people being able to secure. Like, it secures creditors. It allows a company to meet its debtors, right? So, but the point is, how does that philosophically work, right? That's the issue that kind of moves away, because value is a very philosophical thing, right? If I lost everything today in my house, would it make my house any less valuable? It'd be a very personal thing.
It's very personal and very almost arbitrary. But I guess the value is what anyone's willing to pay for it. I guess the difference I see is that literally over millennia, humans have proven that gold is valuable, right? And we've established consistently that gold is valuable over millennia. So there's something relevant to that, right? That
data.
Over
there's 2,000 years worth of data.
Exactly, right?
Yeah.
Whereas NFTs are a couple years that they've been in the mainstream, I guess. And this is the question. Really, it's like kind of the dynamic of, yes, it's valuable if you subscribe value, but then is it also a fad? And it's like, I don't think it's purely a fad. I think at this point it's pretty clear it's here to stay some way, but there's still a fad component, right? So like,
yeah, no, definitely.
And so, yeah, it's really interesting. I guess this is something, like you're saying, it's totally new at the ground floor of something that's going to become very relevant going forward for potentially hundreds of years, right? And so that's what's, I guess, exciting about it for a lot of people. And, I was thinking about virtual real estate.
Yeah.
And I was thinking about like people who went out west in America back around like 1900, the trailblazers, the cowboys who did the westward expansion, the gold rush. And if you bought land out west back then, that was the most speculative thing you could ever do, because there's no government, there's no infrastructure, there's Native Americans running around killing you, there's cowboys killing you. And so you can almost make an argument that would have been just as speculative back then as maybe buying virtual land today. And I think what people like about it is that they like feeling like I can participate in something that's on the ground floor. Whereas when I think in real estate, it's such an overbought, physical real estate, it's so overbought and expensive at this point.
Yeah.
So, the normal person can't participate. Most normal people can't participate. Whereas 100 years ago, a lot of people could have bought land. It was cheap.
Yeah.
Governments gave people land 100 years ago for free as an incentive to settle. And we're so far removed from that now, right? Where there's a shortage of housing, or there's investors bidding prices up, that I feel like people really like the idea that I can get in and be kind of the cowboy on the Western frontier and get into something and own it early.
Yes.
And probably like, but I guess the
That's
downside
with
is
everything, right? Not just real estate, right?
not just real estate, but it's
Yeah.
with real estate, obviously it's my background and it's the connection that makes the most sense to me. But clearly on that westward expansion in America, there's a whole bunch of towns that got abandoned, right?
Yeah.
And so like that's going to happen with NFTs probably, right? There's going to be some that go to zero,
Yeah.
right? Or a lot of them that go to zero.
Yep.
And then there's going to be others that maintain value. So
Nick, I want to ask you this then, linked to that point on real estate, right? I want to just paint a picture for you here in terms of linking it to the metaverse, right? It's like 15 years in the future. We have glasses in on our eyes. We have Neuralink in our ears, right? And we're sat on our sofa, right? Or we're sat in something. Now, with property, right? There's various things. You live in a like really nice studio apartment. I'm living in a house over here. Some people live in 10,000 square foot mansions. Some people are living in huts in India, right? And some people are living in not so great conditions. Some people live in tents. Indigenous people still live. There's lots of various different ways to live, right?
yeah.
In terms of our humanity, what we actually fundamentally need is we just need somewhere to sleep and have shelter and be able to eat and cook, right? Those are like the base level things we need to survive.
Yeah, right.
So I'm just painting the picture for you in terms of, like two things, right? Especially in our generation, people are supremely struggling to get onto the property ladder, especially in this country. I think what they're doing is they're eroding, like kind of at least what they think is they're eroding like the middle class system completely. And basically the upper class will own all the property and they'll rent it to the working class, right? And that's how ownership will work, like moving forward. It's creating rental-based markets or rental-driven markets. My question to you is, when you buy a house, it's a sense of like, we've argued about the benefits or drawbacks of buying houses or ownership, right? It's the same thing, ownership. Why do you want to own? What's the utility around it? My question is, when you buy a house versus renting in a flat or just renting or buying, what is the utility? It's kind of linked to both personal pride and lifestyle need. Let's drive it like 10 years forward. Can you imagine, right? Humanity is growing, like the population is booming. Do you think there is ever going to be a time in human history where humans are sat in capsules, i.e., you're sat in a, whatever, like 100 square meter box, and you've got a headset on, which basically puts you into a property. You're sat, have you seen the Boston Dynamic, the little treadmill ball? It's a treadmill ball that moves you back. It's like a PS4 and PS4 D-pad. It moves you back and forward, left and right? You can move in perpetual motion on something around about this big, right? Can you imagine someone being able to virtually be in the house of their dreams while spending how much, or like what proportion of the cost, right? Do you think that's going to happen?
I can see that. I feel like that's an extreme maybe result, but I could see it inching towards that direction where it seems like what you're saying is that there's the utility of owning a home or whatever, and then there's kind of the superficial aspects of owning a home. Maybe this could replace some of the superficial aspects of owning a home, and if you have this tremendous avatar home or avatar world where you're owning in the metaverse and you don't feel like you need to buy as nice a home in real life, I could see that happening for sure. And I don't know, maybe that could be a positive development. Like everyone is negative about, I feel like most traditional people, these probably, would be in real estate investment, they would be negative about this, right? They would say, oh, why would you want to own something that's not real?
Yeah.
But I think maybe what you were getting at, it's like, there is a component already buying real estate higher and higher up where it's not real. Like you're surpassing the utility and you're just getting higher and higher to satisfy your own ego or desire to have something unique or something nice.
Yeah, well,
and so I think I could see this pushing into that somewhat.
Look,
right?
Nick, it will never be enough, right? Like in terms of like, even we've just bought our first house and we're already thinking humans live on excess, right? We live to acquire more. We live to acquire stuff. We're built to want to drive ourselves, right? We're even planning our next moves, how to make this place better, when in reality, there's no real fundamental need for it. And it's the same thing with FIFA packs, right? EA make $4 billion on FIFA packs. People just opening cards to improve their teams continuously. You see the skins in video games now. It's the same thing I think we're moving towards in terms of this hand-in-hand thing of the metaverse and NFTs. You're going to have a skin for a home. You're going to be able to, have a council flat. You're going to be able to have a mansion. You're going to be able to live in Bel Air. You're going to be able to live like in Colombia in a mansion. So I don't know how divorced we're going to be for it or how interactive it's going to be. I know that we can choose. The key thing about life is always that you can choose to interact with something or you can choose not to. I think you have the massive supply, or you have the massive data points for gold. Actually, I watched a Logan Paul podcast the other day where someone was like, you need to double down on gold right now. Gold has multiple purposes, can be broken down, can be reused, can be made into things.
Yeah, it's pretty cheap. One thing I'm thinking about here, it's going to be interesting in a rising interest rate environment, how all of this stuff does, because that's the fad component, right? And like the maybe too much money floating around the system. Interest rates been really low. All the Federal Reserves are pushing money into the system, but it seems like now a lot of them are going into the more hawkish stage. And I'm very curious, as interest rates go up and all of a sudden, people can like earn some savings in their savings account. And it's going to bring asset prices down all across the board, but that's going to be the test. If NFTs can survive the rising interest rate environment, and crypto can survive the rising interest rate environment, then you kind of know it's legit and it's here to stay. But I'm sure there's going to be a culling, like if interest rates go up 100 basis points, that's going to probably obliterate everything that's
portion of the market, right?
Yeah, a good portion of the market. But then the stuff that's strongest, most valuable is going to stay. And then, maybe that kind of continues into the future. So yeah, I think it's really interesting. I'm going to try to do a video on the virtual real estate at some point for my channel. I'm trying to think what my take is going to be on it. Almost my take maybe was going to be like, who's more speculative and who's making a more risky financial decision? Someone buying in Austin, Texas physically today, or someone buying virtual real estate today?
Okay.
And 9 out of 10 people are going to say, oh, well, it's riskier to buy virtual real estate than buy in Austin, Texas, because it's physical real estate in Austin, Texas, and real estate always goes up.
Yeah.
But I think my point's going to be like, this is going to be more legit than people think in the long run, and it's probably going to crash by a lot in the short run.
Yeah.
But just like many actual physical housing markets are going to crash in America, at least in the intermediate term. And it's definitely a signal, going back again, that there's disenfranchisement among younger people about not being able to participate in the traditional means of owning things. And so Nick, I think this is what you get.
Can I ask you 2 questions? I have 2, to just aid my understanding. When you talk about virtual property, what kind of form is that taking on currently? So that's my first one.
Yeah, I don't really know. I got to educate myself more. I know there's something called, what is it? It's called Decentraland.
Yeah.
It's in the Metaverse. And I think that's one of the main ones where they basically have plots of land. It's a Metaverse. It's like a game almost, right? Like open world. And here's plots of land. You could buy the plots of land. And then
is it linked to? Do you think it's linked to kind of the data underpinning it? I.e., there's only a finite amount of land available.
Yeah, exactly. So there's a finite amount of land in each world. Now the thing is, there can be just a bunch of Decentralands, like they can create new ones, or maybe some other company could create one.
Yeah.
And so that increases the supply of digital land. Obviously, it's almost limitless. At least physical land does have some constraint. But yeah, it's, as far as I know right now, it's like in an existing metaverse, you can buy a plot of land that has, there's a fixed amount in this world. And I think you could buy people are buying like smaller parcels for 15 grand or 10 grand or something like that, which is wild.
Crazy.
And it's like appreciating, and there's already realtors now, like brokers, like real estate agents for virtual land. And so where I see the overlap with real estate is here, that I can see the people, so many investors who buy real estate lie to themselves and say that it's a good investment today.
Yeah.
because they just want to be part of it. They just want to put their money somewhere and own.
FOMO.
That's the same fundamental
driving force.
Yeah. It's the same thought process and driving force. The only difference is the more traditional institutional real estate investors in the real world will delude themselves. Like they'll try to convince themselves that they're making, oh, it's a strong physical, safe asset in Austin, Texas, or Boise, nothing bad is going to happen. Of course, bad things can happen. Only 15 years ago, very bad things happened. Whereas I think the person buying into the metaverse and virtual real estate probably knows that it's like, kind of a Hail Mary, but it's
it's a long shot, right?
It's kind of a cool thing. It's like this new cool thing. And even if that new cool thing crashes by 90%, I respect it. Like I respect that it's something new and it's different. It's on the ground floor, and that most generations and older generations maybe don't understand it. I respect that more almost than the people piling in to the physical real estate, buying a home out from under the nose of a family to satisfy their own kind of just lust for investing in something.
So they're both the same. They're both fundamentally the exact same thing. They're just both investment trying to yield some sort of return, right? And it kind of leads into my second question, right? Because I think we as humans, like I said, want to kind of like test ourselves, or we want to provide more for the generations beneath us. So the example I have is, again, keep going back to Pokemon, but it's such a great case study, right, on things. So the Pokemon base set is like where it peaked at $600,000 last year, the complete base set, right? So when you talk about NFTs or crypto, right, they're kind of currently like the first to market, almost, so to speak, right? So the Pokemon base set $600,000, a game that came out 4 years later called Jewel Masters. I actually have the first 3 sets in its entirety. So the first 3 sets, I own them, I've completed them. They're worth less than cost when I bought them. Maybe at cost, right? Which is crazy to think that had I just compiled the Pokemon base set, and there's dozens or maybe not hundreds of trading card games that failed. So when we talk about stuff going to market, there's hundreds worth of endeavors that go there, and the difficulty is spotting the right investment.
Right. And this is where it acts more like art than it does like physical real estate, right? This is where there's like this, who could know, right? What's going to then take off? Why does this painting go from 20 million to 40 million in 2 years? Why do people love this artist all of a sudden? It's like, who knows? I guess that's the component there of trading cards and NFTs, where it's very kind of random. More random than physical real estate or stocks, which at least still have more of kind of like, all right, like Austin, Texas at least has high job growth, so like you can kind of make sense of it. But then it's like, why does this pack of cards go way more up than that pack of cards? Maybe because Logan Paul tweeted about it. I don't know.
Well, I think market makers make an influence, but I didn't even ask the second question. The second question was this, and you'll probably have a lot more knowledge on this, but what are the amalgams between what's happening now versus when the house market, and I don't know when that was, right? Because I'm sure people have been trading land for years, so to speak, right? Backed up by work. What was the inception of land ownership and trading land and owning land? Where did that come from? Because it'd be really interesting to see the parallels between what happened then versus what is happening now. Because I think that insight into the past is because humans effectively repeat the same things over and over again.
Right.
Different sorts of mechanisms that kind of yield any sort of fruitful design, right? So I want to ask, do you have any knowledge? Because I feel like looking backwards is sometimes the best way to look forward.
I agree. And so you mean just like back in human history? Land ownership. I don't really know. I gotta study up on that. I know America, I mean, that was one of the founding principles of this country was individual ownership of property. But obviously it wasn't invented here. It happened in a lot of other places. Very different from the feudal system, clearly, or the system, the kings own the land and you just work the land, or you pay for the ability to work the land, which is what some people think we're going back to. It's a good question. I think I need to like brush up on that a lot more, but I think you're right. There would be a lot of insights from that. However, I think with NFTs, It reminds me a lot of, actually, to now draw a stock analogy. We did an analogy with physical real estate. We did an analogy with art, but the dot-com bubble in 2000, 2001 seems kind of similar in certain ways to that, where we had all these new internet stocks that just popped up out of nowhere, pets.com, all these stocks. And there's this new technology, the internet, right? That everyone's like, this is going to, it's like, change everything. And it did change everything, but it didn't mean that all of these companies were worth anything, right? And so IPOs, huge amounts of stock price appreciation, and then they all crashed in 2001. The technology companies went down by 70, 80% on average. And like even Amazon went down by 90%, I think, or 80%. Amazon went down by 80%. And of course, Amazon was one of the ones that lasted and is now the biggest company in the world, or one of the. But this reminds me a lot of that, where there's this new legitimate technology that people are saying it's going to change the world, is going to change the world. But then all this, people then try to latch onto that and attach, whatever thing they're trying to sling.
Yeah.
And it's going to lead to a big crash. And so I think that might actually be the best analogy, is the dot-com bubble, 2000, 2001, based on, the new technology stimulating things. Right. There was actually, there was like some inflation around then. There was all this other stuff going on. And then a whole bunch, a lot of people got completely wiped out.
Yeah.
And then even the most valuable stuff went down by 70%. But then the most valuable stuff stuck around. So I think that's an interesting analogy too.
Yeah, to be honest, I don't know where it's heading. Like, I don't know if crypto NFTs will have the benefit of being first to market. Usually, first to market is like massively valuable. It doesn't mean you're going to end up the winner, right? There's been football teams that were first to playing football and they're not on top now. There's always kind of something that ends up becoming better. It's all about the kind of efficiency. I do think that we're moving into a more I think we're moving more virtually. I don't know what kind of physical manifestation that takes, but I just think that the analogies of we're 20th century software operating on 10th century hardware, we're limited by sometimes what our body's capable of. So not to get too philosophical, but it does seem like not the internet, but it does seem like virtual reality is kind of a step towards what we're going to be doing, right? Being able to map how we think, or even being able to buy someone's way of thinking, or being able to buy someone's way of strategizing, or just getting insights. I don't know what form it's going to take, but it seems like it's moving in that direction.
Here's another thing I'm thinking: if NFTs really do explode and grow, and crypto keeps growing, if the money supply stays relatively fixed, it seems like that would necessitate that the real world assets go down, right? Like if you're just creating all these new assets, because they're assets, right? If you're creating all these new assets,
and
imagine the same amount of money, like say there's $1 trillion in the system and you had 100 assets, but now you add on 25 digital assets. It should lower the value of the real assets.
Yes.
Right? If it's the same amount of money.
Yes.
Now, right now, all the Fed QE, the stimulus checks, all that kind of stuff, seems like it increased the amount of money. But that's the other interesting thing I'm thinking about too. Like if this stuff kind of sticks around, it's going to be could be a substitute. It's a substitute or an alternative for the traditional investments. Which would lower the value of the traditional investments, which actually is kind of the most democratic thing, right? Like kind of the point of crypto, right? Like is to kind of like undercut the dollar somewhat that people don't like it. Would virtual real estate undercut actual real estate? Would virtual art undercut actual art? And basically bring kind of an equilibrium to some of this stuff. That kind of would be a really cool outcome, I think, and be very democratic and maybe what people want. Who knows though? It's gonna need to stand the test of the money supply stopping growing, and the interest rates going up. If it can stand that test, then it's gonna be interesting.
So whilst your logic is always on point, like your analysis is really deep, and you kind of understand the driving forces. But I always like go. Maybe it's just in good like part like I don't know, part being like inquisitive in terms of like always wanting to ask what came before. But what are the driving forces behind some of those things? Because these are like forces that we're currently used to exploring, stuff like interest rates and inflation and like a limited money supply, right? But is there going to be a new, almost new way of operating? We're used to operating within a capitalist structure, right? Like free market that works how you're saying, right? It moves with supply and demand. But
Yeah.
are there concepts currently outside of our understanding that will start to coalesce with some of these new things? And so I don't really understand that. Or do you
Yeah,
think
maybe. I don't know. Maybe the thing is like interest rate. I mean, it's been around for so long, right? It's like gold. It's the interest rate and the cost of borrowing and all of that has been so influential for so long, and I'm skeptical that it would be replaced or reduced. And so I don't know. I have a hard time. Maybe I can't conceive of it. But I have a hard time thinking that the rules of the game are going to change substantially, as far as higher interest rates are going to mean more people save money
Yeah,
and spend less on assets and into the economy. Like I think, well, maybe, I mean, what could change is like, I don't know if crypto is set up, income stream is like where the difference is, right? You can get an income stream from owning a rental property. You can get an income stream from putting your money into a savings account or buying a stock and getting a dividend. Is there
yeah.
ever going to be a point with NFTs and crypto where you can get income streams, not just betting on appreciation of an asset, but
I
you can
see.
actually get, 'cause everyone's always going to want that, right?
Yeah,
Is there, and I saw, for instance, like in one of the virtual Snoop Dogg, I want to say owned virtual plot of land, and like he threw a party and he charged money or something, or charged Ethereum for people to get in, right? So it's like, oh, he made money off it.
yeah.
But that's what turns something into an actual investment in the end. Is like if you can,
A recurrent revenue stream.
yeah, is that possible on the way any of this is set up?
So, and I'm guessing it's very dependent on the asset, right? That's the issue, right? There's certain things that I can't. It must follow the same rules of real life. There's certain collectibles I can't monetize, but I could easily quite monetize my house by renting out a few rooms, right? So I'm guessing it depends on the asset class
Could
within
you
the
sell an
crypto.
NFT of your house and like
I could probably sell an NFT to each individual room. What that would mean was what would it be? It'd be
right? That wouldn't be enforceable, right? Like the person goes to court is like, I bought the NFT for this room. I'm allowed to stay there. Like that's not what that is, right?
It's more, I own Mustafa Bucks's NFT of his room. That's very separate, I think, to
You
the
don't
owner.
own the room.
I
Yeah.
don't own the room. I own the
It's a
NFT of.
derivative. It's a derivative, right? Like
Yes, it's an option.
it's an option. It's a derivative.
Yeah.
Yeah. And so in some ways that looks very much like '06, '07. Lots of derivatives back then. So yeah, there's lots of derivatives, but yeah, man. Well, this has been a good conversation. I'm trying to like get my head into understanding it because I know it's something I'll probably need to talk about
Yeah.
at some point soon on my channel. And I'm still naturally skeptical of a lot of it, or at least like the values and the appreciation. And I think probably even most people who are into it are skeptical of all that.
Yeah.
But it's probably something that should be paid more attention to by mainstream, at least acknowledging that it's something that's there and it's going to grow and it's going to be competitive to some of the traditional investment vehicles.
Yeah. Like everything, only time can tell, right? That's the real thing.
Only time can tell.
Only time can tell.
Well, that was good.
So yeah, I hope for those who stay through 47 minutes, my analytics say that people usually get to about 1 minute 40. So if you did manage to break through the other 42 minutes or so, absolute trooper. I think there were some really good comments made there by Nick. Some maybe good comments made by me. Probably I'm not the best person to judge on that, but we are entering a really really exciting time for humanity ahead, where generally there's a lot of innovation going on around us. A lot of people seem to think it's slowed down, but the world, like we live in a very safe time relative to other times in human history, but the world can sometimes almost feel like a very scary place based on what's going on outside of our control. The metaverse is going to be something outside of our control. One thing I will say is all these things. I mean, I've not really engaged with a lot of these things as much as I maybe should have. I don't really gamble my own money. I've kind of had other things to do with my money, but it's something that I'm looking to do moving forward. By any means, this video doesn't constitute any financial advice. You should probably do that, do all the research yourself. One thing I will say is that, in terms of engagement or engagement with anything that is scary or something that is quite out of your understanding, the best thing to remember is that actually no one is forcing anyone to engage with anything, at least at this point in time. And if if you don't want to engage with it, you don't really care about it, then you don't have to. So whilst the metaverse and all this virtual reality and the distinction between reality and what's real, a la the Matrix, well, at the end of the day, these are things that we actually have a choice to sign up to. And if we don't want to sign up to them, then that's our choice, and that's the greatest thing about humanity. It's the fact that we all have a choice. Please don't forget to like, comment, subscribe. As I said, happy New Year again to everyone, and that's